right now, gold has been basically the main pair I've been trading. I do have these pairs on my list. So I just look at gold. I have euro and US 30 as well. I'm gonna add this on because there was a trade I seen some of you guys take. We're gonna cover that on NOS later, but as of right now, we'll just take a peek. I'm gonna cover what gold did. So, wow, yeah. So lots of news this week, guys. Yeah. Okay, cool. So I put the little forecast out before the NFP. I had this high marked out, and these lows down here. Okay. Why? Simple stuff, right? You can see, structurally speaking, this was on Wednesday. So Wednesday and Thursday, took the high out, came down, respected the lows, right, and just moved away. You got to think about why this happens, right? So if you're looking for trades Wednesday and Thursday, the market ends up just building liquidity essentially for 2 days. Why? Because of NFP on Friday. So essentially, NFP used Wednesday and Thursday to build liquidity and then literally just spiked the high to the left, ran to the lows that we built liquidity at. Okay. And you can also see that we ended up running for all this liquidity as well. All right. That gets spiked out right here. Okay. But yeah, grab this high. You can see right above it, we have a liquidity block here. Okay, and if you can follow my cursor, we spiked that high right here. And now this high here was now trading in this liquidity block. Okay. Honestly, there's no point to even refine it. We can see it was filled on the 15 here, and then yeah, price tapped into it. And this happened, I believe, yeah, it was right at NFP, right? Yeah, it was. So we'll hop into the 1 minute. Okay, so NFP, big spike up. Stretch this out. How many pips did we move? So about 200 pips of a spike in a matter of 10 minutes-ish. 200 pips to the upside. Grab that liquidity from the left-hand side we were talking about. Okay. The high over here. Price breaks down to the lows. Sweeps this low ever so slightly. So this wasn't like my favorite type of setup, and reason being, since we took this low, it kind of goes against what I like to do, and this is essentially where retail is going to be selling from. Okay, I know some people ended up taking this trade. It's not wrong. There's a liquidity block up here, so with understanding of that, there should not be any liquidity up here. So there should be some types of reactions from this area, which we ended up getting. Just again, it's just not my favorite type of setup. I'd like to see the low respected instead of the low breaking. But either way, it still worked out. Again, the important part is since this whole area was a liquidity block, you can see price tapped into it here and then had that big breakdown, right? Time-wise, if I mark this out, so you can see 9 a.m. Let's see where that is. Yeah, so this ended up being pretty nice. So check this out. If we go on the hourly, just look at these candles. So 8 a.m. obviously printed this high from NFP. 9 a.m. printed this high here. And look what 10 a.m. did. 10 a.m. ended up coming back up, spiking 9 a.m. high. And essentially after anywhere it trades above here, anywhere above 9 a.m. high is now essentially within this liquidity block area. If you follow what I'm saying, let me get this right. Anywhere above this high, you're now in this liquidity block, okay? This last high. Does that make sense to you guys? So essentially a higher time frame entry wise would have been like this. Literally after the liquidity is taken, after this high is taken, stop goes to the liquidity block. And then whatever you're targeting. So the lows there, the equal lows. And literally just from an H1 entry, you're able to have a 30 pip stop and a 400 pip target. Obviously it's going to be hard for you to notice this in the moment, but this is all about time, right? So basically what price does is it waits for 9 a.m. to print that high. 9 a.m. prints that high, 10 a.m. opens up, sweeps it, and then again, it's trading within this whole liquidity block area. So anywhere above this was a nice sell, extreme wise. Let's see if there's a confirmation based entry. I believe on the 5-minute. I'll check it out. So we spiked the high here. We're at 10:05. So 5 minutes into 10 o'clock, we spiked that high, that 9 o'clock high, break down. This now becomes a liquidity block. Okay. And then you can see we end up running this high, trading into the liquidity block area. Anywhere above this high here at 10:10, anywhere above 10:10 high could have been another entry. So just like this, stop would go above the liquidity block. Again, this is just based off highs and lows. I could go into a time frame lower and try to find an imbalance in here, but I'm just not bothered to do that. I don't need to find that perfectly refined entry. When that liquidity is taken, that's all I need, right? So liquidity block gets respected here. Liquidity block gets respected here. And then finally we get that breakdown to the downside. Oops. Just like this. And again, target wise, you could keep it easy and simple. You could have partials taken at these lows here, which is fine. And then obviously the lows that I outlined on the forecast would have been a great area to be targeting as well. Down here. And yeah, what a mad day on gold it was. I mean, you have that short providing 400 plus pips. But yeah, what do I think gold's going to be doing now? Is a good question. So let's check this out. On the daily, what did we do? We took out this daily high, which fueled that sell off to the downside. Ended up sweeping previous daily low. Let's mark it out like this. Ended up sweeping previous daily low, so Thursday's low. We now left. So look at this actually. Friday sweeps Thursday high, Thursday low. Now, could we go back to the upside? It's possible, right? Since we've now respected the high. Oops. Since we've now respected the high, we got liquidity up there, right? Price respected it, moved away, hunted for internal. Could we run up to the highs? It's possible. Check this out on the 4-hour time frame. It looks like, so again, there was that previous daily low right here. Ended up hunting for more internal down here. And check out what we respected. Liquidity block. We fill it? Yeah, we did. So tapping into that area to the T. We respected why? Well, we swept it, leaving us a liquidity block. So that's why I ended up bouncing out of that area. But yeah, day is done now. The entry would have been just the sell, nothing else. But target wise, I like these lows. You got these internal points as well. And then on a very intra-session perspective, again, we had those equals that we left there. Okay, so that's it for gold. Where can we head to next? We'll see. As of right now, I always talk about this. After a big move in the market, I like to just sit on my hands a little bit, let price develop. Okay, let price develop here, and then I'll be able to pinpoint a story as where we can head to next, right? Because in this example, we had liquidity to the downside, okay? And we took liquidity at the upside, so it made sense to come back down to the lows. As of right now, there's nothing here, so I can't build that story yet, okay? So you're simply just gotta wait for price to develop, and things will be more clear. Cool. I wanted to cover some of your stuff. By the way, guys, apologies. Today won't be the longest webinar. I am a little bit in a rush. I have to go do stuff for my family, but I'll get in as much as possible, of course. But yeah, I just want to let you guys know beforehand. Okay, Euro. This is one I really wanted to cover with you guys. This was, look at this move. 150 pips on Euro, which is a lot. Start off on the weekly, actually, so we can see what we're doing. But look at that weekly candle flip. All that happened, was it just today? Yeah. And just today's price action, we flipped that whole candle over. But yeah, look at this, how we sweep previous weekly low and then come for previous weekly high. Okay. And of course, obviously, we go a little bit lower to hunt internal down here. Let's take a look, see what that looks like in the daily. Make sure this stuff is visible. There. So there's that previous weekly high, previous weekly low here. all the price action below it was essentially just manipulation, right? So basically all of this was a false move to the downside. Okay, that manipulation to hunt liquidity to the downside, and then just that massive flip back up on that weekly candle, right? So where do we end up hunting for? All this liquidity down here, I'm assuming taps into this. Yeah, that's perfect. Go on to the 1 hour. Move this over now. Yeah, but look how we hunt for that internal. Okay. Before we hunt for the internal, let's dive into the price action beforehand, because this is the important part. Okay. So after sweeping out previous weekly low, we get a reaction up. Okay. Respecting this area to the left-hand side, moving away from it. Okay. Respecting, moving away. We now have liquidity above here. Okay. Simple stuff. We respect it, moved away. So we now have an area that we can look to target in the future. Perfect. So after sweeping that low, now that tells me sellers are induced in the market. Where are they looking to enter positions? Here. Okay. If we get reactions from here, it should just be false and short-lived, right? And that's exactly what happened. We respect it. We move away. So it tells me what? Liquidity above here now as well. Okay. Where do we hunt for? Simple stuff. Internal. Internal liquidity. Go to the 15-minute. Maybe you can see a little bit better. There's your low. Okay. High, low, and then we move higher. Respect the area. We come back here to trap buyers out. Not only is that trap buyers out, same thing applies. Now sellers are induced. Look how when price approached this high, we stalled here for 15. Actually, measure this. So for about an hour and a half, we stalled at this smart money trap, and then before continuing up to the upside. Okay. As for entries, I believe there wasn't anything too clean over here. Let's take a look actually. See if there's a way of entering this. So we wanted this liquidity taken. Yeah, you would have had to have a big stop. Oops. And then the target would be, let's see if you can sneak a 1 to 3 still. Oh God, I don't know why TradingView is so buggy. Yeah, you can't even get a 1 to 3 out of this. So in this example here, this is when I do not take, or sorry, this is when I get a little more greedy with my entries. Okay, so the RR makes sense. Because if I waited a little bit longer, you could sneak. If you got lucky with, not really lucky, but if you waited and got a little more greedy with your entry, you can almost sneak a 1 to 3.5-ish, okay, to your target here. And then also we have this high up here. So let's see what it looks like up here. Boom. So you can still get a 1 to 4. But in this example, like I usually say to you guys, I take the entry right when the low is taken. If you were targeting this high, it is a 1 to 3.5. But if you weren't and you were targeting maybe these highs up here, it's less than 1 to 3. So you got to be able to allow price to go a little bit deeper. So then the RR makes sense. But that, again, that's what works for me. I want to be taking something that's at least 3 times my risk. Okay. So sorry, the reward can be 3 times my risk. But again, that's something for me. I know some people in the group are okay with doing some 1 to 2s and stuff like that. So it's just completely up to you. See what works for you and go from there. So that long ends up happening. Coincidence how we look how we built liquidity here and then we ran it. Simple stuff. Build up, run away, and then we end up hunting for that liquidity later on. Cool. So we take the high and we end up moving lower. This area, false reaction up. Same thing. Look how we take out this high, which tells me what? Buyers are induced. This is going to be a trap down here. We do not trade from there. And it comes lower to take all of these lows out. Perfect. That's what you want to see. But not only that, we take out the lows on the left-hand side. Okay? So now this is where we want to be looking at price. So we'll go to 5. Yeah, the 5 allowed just you to have any sort of entry here. Okay. So yesterday in New York, same thing. Remember how I spoke about on gold that Wednesday, Thursday built liquidity for the following day, right? And that's exactly what happens here. Thursday, New York builds liquidity for price later on. Okay, so we spike the low down here. And then we continuously move higher. Look how we kind of respect retail, right? High, low, high, low. We respect this low. Okay, move away. We even induce higher again, take out this high. So you gotta remember, like, the intention behind this is when we take out these highs, buyers want to keep entering the market, thinking it's just going to continue in this bullish trend forever and ever and ever, right? Price comes down, traps buyers here. Okay, then we run up, take out this high, which tells me what again? Buyers induced. We want to see price below this guy. Okay, look to the left. Why did this low print? This low here at 11:20 on Thursday. If you look to the left, we printed because of this whole area. So if you simply mark this low, drag it over, check that out. So price here printed this low because of this area to the left. I grab this low, drag it over, the inducement from the left. Now we run it and respect it and move away. What have we now left? What's this? I won't go. Liquidity block. Thank you. Very simple stuff. Liquidity block. Print it, move away. Any reactions at this high, same thing. False. Okay? All of this. False, false, false. We do not take any sells, obviously, that you'd be trading with retail. Look at price does again. Creates more liquidity from us. High, low, high, induces higher again. This is now what? Trap. We do not trade from these areas. So I'll grab a red box. This whole area is a trap. Wow, big coincidence. We built liquidity here just to get taken out. So what's below this low? A liquidity block. This is a valid entry right here. Stop below the liquidity block. Just like that. Oops. Stop below the liquidity block left here. Perfect. And targeting, this is going to be trap up here. Any reactions that we do get are going to be false. You can target this as an intraday target. Perfect. There's one entry. Drag this over. I'm going to lose it with this trading view stuff. It keeps bugging out. Before tapping to this area, again, look how price just creates more liquidity for us. High, low, high, inducing higher again. This is now a trap. We do not want to be buying from there. We want to see price below. Okay. And what do we have below? Another liquidity block. So in this example, does it make sense to buy right when the low is taken? Probably. You still can do it. You'd have to have your stop below. Oh my God. Why is TradingView doing this? Below the liquidity block and target up here. There's 1, 2, 3. Since price has taken out this low, another again, what is that? Liquidity block. Magic. Before the liquidity block gets tapped into, what do? We create more liquidity. High, low, high, low, high, low. Run all the way up. React off this trap. Where is this going to run to now? The liquidity. Okay. We built up that liquidity all on purpose. So look how we break that high, and then price comes up, breaks that high again, keeps having these breaking structures for retail, breaks that high again. All these areas are going to be areas that retail is going to be buying from. This low, this low, this low. You grab that last low where the liquidity is. A buy anywhere below this is valid. So same thing. And your target, boom. These are all, and this is all just intraday targets, right? On the lower time frames. You still have your higher time frame targets up here. Look at these beautiful equals up here. Imagine the resistance traders that entered in up here and just left their stop losses above. They all get destroyed. I did not take it because it is very confusing to me when the liquidity block is valid to respect the Nah, you just got to keep practicing. I don't know what to tell you. Liquidity block concept is not very that difficult. I'll be honest, right? Simple stuff. Liquidity block, boom. That's it. Buy. Don't overcomplicate it. Okay. Liquidity blocks we do not use is something like this. They can provide reactions, but it's not going to be. Look, this is what a liquidity block, right? But since we took out this high, now you're trading with retail. It can come down and respect it, but it's not going to be one I'll take. This now becomes an area I do not want to use. Again, there's going to be times where it does work, but it's low probability. Okay? Good, or sorry, bad, good. Okay. Any questions on this? And then, like, look at this move back up. Oh my God. Honestly, entry wise too, like, dude, if unfortunately New York traders no entries, but like it's still beautiful to see. It really is. You have one opportunity here. You have two, three, four. There's four trade opportunities. Like it's beautiful to see. Um, but yeah, super, super, super clean. Let's see where this thing can go now. Long-term wise, we've continuously broke this chart down on the higher time frames, but I'd like to keep looking how stab those lows up here. We have false reaction at the highs. Okay, we move away. Now we have liquidity up here. Perfect. From here, we move lower. Respect something to the left. Go higher to clear internal. Buyers induced. This area was a trap. Also a liquidity block. That's why it was respected for a little bit. Continue selling off to where? Look, check this out. Make sure this is visible. So right here, took out the highs, buyers induced. So look how we respect the lows and move higher. Okay, why was this area respected? Liquidity block. Okay, so it's temporarily respected. There was no liquidity there yet. Now there's liquidity there. Since we respected it, moved away. So boom, run for that. End up running for the low on the left-hand side as well. Same thing. Why did this low print? Look to the left. Coincidence that we build liquidity here from this low, and then we end up just running the low. That ends up being the extreme, moving higher. Okay. We induce higher, trap buyers. Okay. We end up running all the way down for a liquidity block. Look at that. From that area, we move higher. Okay. And I'm pretty sure we respect this high, right? I believe. Yeah. Look how this area respects, sorry, this high respects this high, moves away. We have liquidity there again. Same thing. Okay. When we move away like that, it just provides us a target to an area to target in the future. We move lower, and then again, that whole breakdown we just did. Right? Same thing. Induce buyers, trap them, look to the left, take out that low, and just moonshot to the upside. All of this liquidity left here, here, here. That's all getting targeted now. Now, since we've had a big move, same thing with gold. What do we need? We need price to develop, okay? We need some sort of entry. We just had this massive bullish candle. All I see is just H1 candles going up. I just need more data now, okay? I won't, there's going to be no entries most likely Monday. Wait to see what Tuesday has. But yeah, again, back to the higher time frames. Let's see where this thing can head. We are sitting at the highs. technically speaking, a liquidity block. Even just scrap this. Liquidity block. Could we respect it temporarily and move back down? Definitely possible, right? If we do respect this area, continue down, and then you see a continuation, since we respect it, move away, boom, liquidity and liquidity. And then finally, liquidity. Okay, same thing over and over and over. But yeah, I do definitely see gold going higher. Since we've taken out this low and this low, any area or any reactions at this area up here, trap. Oops. Right, so any reaction to this area up here, trap. So we'll just wait and see what happens. I definitely am leaning towards a lot more higher prices on euro. Okay. And then obviously we got like this area, these highs on the left-hand side, but these won't be seen for weeks / months ahead. Yeah, I'm gonna get to it better. But yeah, this high respects this high, moves away. So we got liquidity up here. All right. So stupid clean stuff on euro, honestly. Really clean. This long. Elijah just joined up to that guy, took it from the bottom, and that was textbook. Down here, along with the friggin' 6 other entries that I provided. Okay. I'm gonna hop over to NOS, because this was the other trade of the week, in my opinion. Okay, so this thing's been on the moon. We'll go to the daily here. You can see how price came into this area over here. All right. Respected it. Why? Simple stuff again. I marked on. You guys should know this by now. This is a liquidity block. So that's why this area was respected. We moved away. What happens when we move away like that? Boom. We got liquidity down there now. Okay. Go down to the 4-hour. So what happens? We'll go to the 1 actually, because this is a good example. Everyone's like, "Oh, how do you know what time frame to go on and stuff?" I'm looking at this PA right here on the 4-hour, and it's squeezed up. It's just ugly, right? Like, look, candle, candle, candle. Like all this is just ugly. Just simply go down a time frame. Okay, opens up PA. That's it. So price from this high sells off. Okay, respects the low, comes higher, respects the high, and then we sell off. Clear the lows, leaving what at the highs? Liquidity. Perfect. So we grab the lows and then run for the highs. Now, since we have now trapped the sellers, what's the intention behind this whole bullish move? It's to induce buyers into the markets. Sorry, into the market, right? Because we take out this high, people are going to see this big bullish move. And don't forget this red area coming off this order block area, whatever this POI they have, they're going to mark this on as their break of structure. Okay. They are going to be looking for all these areas are going to be buying opportunities for these people. Okay. Here. Maybe down here. All these areas are going to be looking for buys. Okay. So, simply just you want to sell into that. Okay. And that what yesterday provided us Thursday. So let's dive into this PA here. Okay. So Wednesday, prints that high of the day. Okay. Now look how, if we were just sitting here, this is the beauty of me telling you guys to just chill out and wait for price to develop. There's no price action here right now. Okay. If you wait, price develops, and then that story's told. Okay. And then entries can be taken. So just sit on your hands. When there's a big move in the market, just literally wait for price to develop in front of you. You want that current price action to build that entry for you. And then you just continue along with the story on the high time frames. Okay. So we print this high, come lower, respect the lows, move away. We got liquidity at the lows. We hunt for that. Okay. Then we induce buyers, trap them. Since we've taken out this low, what's this going to be? Trap. Okay. What do we want to see at this trap? We want to see a build up occur. So we've taken out this low. What's the intention behind that? Sellers are going to be looking to sell this thing now, anywhere at the highs, and that's exactly what happens. We bump our heads into that. Sellers are now entering the market here. We get a move away. Perfect. Now we have what above this high? Liquidity. So we move away, come down to the lows. I know some of you guys took this entry down here. You had this extreme liquidity block, which is nasty. Taps into it, moves away. What do we have down here now? Same thing over and over and over. Okay, so we've left equals. This is now an even more, what's it called? Another confluence for this short to occur from the higher time frames. Okay, we run from the lows to the highs and we trap that liquidity. And this is beautiful stuff. Look right to the left. Why does it respect? As soon as we're on this liquidity, why do we move away? Simple stuff. Liquidity block left for us. This is just screaming sells. Entry. Stop. Remember our targets from the higher time frame? Boom. And then finally, low from the left-hand side is going to be the next target. Down here. Obviously, we're not going to be holding full volume for a 1 to 45. Let's be realistic here. I'm not here to sell you guys Lamborghinis. That'd be ridiculous. We would definitely want to be partialing. Actually, let me get the tool back up. I would be closing, realistically, I'd probably close 50% at this low. Okay. And then this is now another good target. You got some internal liquidity left here. Okay. Price respects this low to the left, moves away. So we got liquidity below here. That's another good target to hold to. And then finally, like I talked about on the higher time frames, you have the lows down here. Okay. And then obviously the low on the left-hand side as well, the one I got marked. We haven't made it there yet, but it's definitely going to be a realistic target. Okay. Look what happens before we continue selling off today. Price respects this smart money trap. Why? Well, because buyers are going to be looking to take entries at this area. So it simply purposely respects it. What do we do here? This high respected these highs to the left. Boom. Since we've taken out this high and this high, what's that going to tell me? Buyers are induced down here. Even more liquidity at the lows. So I don't know if there was a sell opportunity. This is a shitty time to be trading, but still, concept still applies. Highs taken, and we continue selling off to the downside. Today, I believe, yeah, you guys took this trade, right? Or somebody took this trade. I went to the 1 minute. So kind of building liquidity here. High, low, and then a big move to the upside here, taking out previous highs. Trap. Don't want to be trading there. So price ends up running it. Perfect. Here's entry. Here's stop loss. Here's target. Done. Another good trade on us. Some really clean stuff. After that high's taken, what does that tell me? Sellers are now trapped. Oops. Sellers are trapped. Buyers induced. Look at the liquidity left to the downside. Rinse and repeat. Back down to the lows we go. Okay. As for entries on this one here, cheeky one would have been price ends up respecting this. This area over here. That liquidity block, but that's about it. Other than that, wasn't too clean of an entry. Wasn't too clean as to take an entry. Directionally perfect. Everything worked out nice. Unfortunately, there wasn't like the cleanest of entries. Like if to take that and keep your stop above this wouldn't have been too realistic. What you could have done was maybe take a entry like this. And if you look to the left, you got a more You got a liquidity block higher up here, I believe. Let's look on the higher time frames and see if it makes sense. Five minutes. You got like this wick over here. Honestly, nothing too clean. I don't want to be unrealistic. Like I said, directionally speaking, very nice. Entry wise, not the cleanest of entries given. But yeah, not very clean. But this short was just something else. Yeah, this is perfection. Directionally and entry was perfect. All right. Anybody got any questions? No messages. I hope that's good news. Clean. It is clean. Yeah. I think what was it? US3 had something similar-ish. Understood everything. I like how you put it in capital letters too. Thanks for clarity. It's crazy when you dissect the charts. Appreciate that, brother. That's good. I like that. That's what we're looking for. But yeah, guys, like these are the kind of trades you want to be waiting for. Like this is perfect here, and then you got the euro ones down here. Clean, clean, clean. There was probably like what, 5 good trades this week? More than enough. Like I tell you guys, 1 to 3 is all you need per week, right? You paid the bill seriously. EU was stupid clean. Yeah, 1 to 3 trades is all you need. It's important to show up every day, be consistent, but it's important to also show up every day and be disciplined. Okay, you're not showing up every day to trade every day because that's just unrealistic. If you're taking a trade every single day, there's problems. I'm going to be honest. Do not take a trade Monday, Tuesday, Wednesday, Thursday, Friday. Less is more on the charts. As soon as I start taking 1 to 3 trades per week, everything changes. Higher hit rate, profits are bigger. Okay, you don't need to. It's important to show up every day, like I said, but don't show up every day to just trade every day. That's degenerate. It's almost like you need to be in a trade. You don't need to be in a trade. Yeah, exactly. Facts, capital preservation is key. It's crazy too, guys. Remember at the beginning of this week, I was like, this week was heavy on news, but sometimes weeks are heavy on news, but they still end up being beautiful weeks. It is what it is. Sometimes they are, sometimes they aren't. That's the market, right? But that's the importance of showing up every single day. Sometimes it's good, sometimes it's not. You have to be ready for both sides. All right. If no one else has any more questions, let me know. Little by little, yes, sir. Keep doing your thing. For the new people in here, I'll just let you know, a lot of people come in and they join up, and then within like 24, 40 hours, they're like, oh, like I'm confused here, confused there. Just give yourself a week or two, please. Just do yourself a favor and don't rush it. And then you'll come back to me and be like, wow, I shouldn't have said I didn't understand it because now I do. It's the same thing over and over and over. Just be patient, go over the content. The more you understand, if you end up going back and look over the content, you'll soak things in differently as well. The more you progress. But yeah, like I said, don't rush it, please. Eyeballs. Yeah, guys. If that is everything, let me know. These calls are for you guys, right? If you guys have any questions, let me know. This is the time to ask me questions. It could be technicals related, or it could also be anything. My experience, psychology. Let me know. I'm here to help. But yeah, Euro's looking good to go up. Good, good, good. Okay. No one else is putting anything in. What's your drawdown management like? My drawdown management depends what I'm trading. I'll be honest. I could give two shits about challenges if I am not in a manner where I'm just being an idiot, but if I'm in drawdown on a challenge, I just continue to use 1% risk. If I'm drawdown on a funded, depends how much. Typically, I actually don't really adjust my risk too much. I like to stay in between 1 to 1.5 per trade. But if the account's deep in drawdown, I'd say like my best advice would be just tone down the risk a bit, get the confidence back in check, get the balance maybe up a little bit more. Once the confidence up, the balance is up again. Then I guess use no more risk, right? Because you don't want to be using too much risk when your confidence is down as well. Maybe it's good to use a little bit lower, get that confidence back up. If you're on a little losing streak that caused the drawdown, tone down the risk, get the confidence up, the balance up a little bit, and then maybe adjust your risk accordingly. Only prop firm I'm using I have accounts actually with Funded Peaks, but they don't use MT5 anymore. So there's accounts over there, but I'm just not trading them. I'm acquiring funding with Alpha right now. So I've finished quite a few challenges with them already. I'm just gonna get max allocated with them and then start trading my funders with them. That's exactly what I did. I risked less and actually is almost back to starting. Exactly, that's it. Little by little. 2 prop firms I recommend right now, and I'm gonna stick with for the time being. I'll let you guys know if anything changes, of course, is Alpha Capital. I have a lot of trust in them. The owners are like top-notch dudes. These guys they have like hedge fund backgrounds and stuff. Like they don't fuck around. They're big dogs. And also, of course, Riz works with them, so it's good to have another a guy on board. I've had no problems with anything but Alpha. So yeah, highly recommend Alpha. And of course, the other one's gonna be FTMO. FTMO has been around the longest. They've been highly respected for the longest time. So if you want to trade any prop firms, Alpha and FTMO. Funded Peaks is good if you don't want to if you're okay with not using. Oh no, you know what? Also funding pips. When I was in Dubai, actually, I was hanging out with his name's Khalid or Khalid, however you want to say it, the owner of Funding Pips. Super, super good guy and like hardworking dude. That's another company I do like. I actually forgot to mention them, to be honest. The reason why I'm not using them right now is because they do not allow MT5 right now. But I think they are eventually. So I will maybe diversify into funding pips in the future. But I do like them. What's your view on 5%ers? What's 5%ers? I've never heard of them. If I haven't heard of them, I probably don't. It's probably not good. I'll be honest. Just stick to the ones I recommend, please. At the end of the day, even the ones I recommend, they're not always going to be 100%, but I have a little bit of experience and there's people I know in the space. So it'll definitely help/aid us. What account size would you recommend starting? Okay, this is a good question. A lot of people like to go to prop firms and jump all the ladders and go straight to a 200K or even like 100K. It's a big mistake. Okay. Please, if you are starting off with prop firms, start off on the smaller accounts and work your way up. Reason being is this is an analogy I always use. If you go to the gym and you start using you're not going to start at the gym, sorry, and go straight to like 40, 50, 60-pound dumbbells. Impossible. So you want to start small and then work your way up. Same thing with this capital. If you go straight to 100K, 200K, your mental is going to be all over the place. It just won't work. So start off with 10K challenge, maybe 25K challenge. Get those passed and just work your way up the ladder. Okay, eventually you'll get to 100K, and emotionally you'll be able to handle those numbers more and more. All right, but don't rush it. You want to start on the smaller accounts and work your way up. Again, it's all perspective, right? If you can make 5% on 25K, eventually you'll be able to make 5% on 100K or 200K. All right. All right, guys. I think that's up for me, or all done for me. I have this recorded, so if you guys want to watch it back, feel free to. I'll upload it right away. But yeah, really good week. Honestly, a lot of you guys in the Discord this week absolutely smashed it. Especially some of even the new guys that hopped in. I see how the charts are looking better already, which is good to see. But yeah, let's keep doing our thing. I will see you guys. Hope you guys have a good weekend. And I'll see you back in the Discord on Monday. Have a good weekend, brother. Yeah, brother, I'll talk to you soon. And the rest of you have a good weekend as well. See you guys Monday. All right? Take it easy.